The end of the petrodollar, Saudi Arabia's shift and its global implications. In a move that signals a profound shift in the global financial landscape, Saudi Arabia has announced it will not renew the 50-year-old petrodollar agreement with the United States. Instead, the kingdom will now sell its oil in multiple currencies, including the Chinese RMB, euros, yen, and yuan. This decision marks the end of an era that began after World War II, a time when the petrodollar system allowed the United States to exert substantial control over the world's energy markets and maintain dominance in international trade. The ramifications of this shift are far-reaching, affecting global markets, geopolitical dynamics, and the standards of living in America. Today we will explore why Saudi Arabia made this decision, what it means for the world, and what the future might hold. The origins and the impact of the petrodollar agreement. The petrodollar system was established in 1970s when the United States and Saudi Arabia reached an agreement that oil transactions would be conducted in US dollars. This arrangement ensured a steady demand for the dollar, reinforcing its status as the world's primary reserve currency. In return, the US provided military protection and economic support to Saudi Arabia. The petrodollar replaced gold as a standard of value and played a pivotal role in maintaining the US dollar's supremacy in global trade and finance. Why Saudi Arabia is moving away from the petrodollar? Several factors have influenced Saudi Arabia's decision to shift away from the petrodollar system. Diversification of economic partnership. Saudi Arabia has been increasingly seeking to diversify its economic and geopolitical alliances. By conducting oil transactions in multiple currencies, it can strengthen ties with major economies like China, the European Union, and Japan. This diversification reduces the kingdom's dependency on the US and spreads its economic risk across a broader base. Geopolitical tension. The geopolitical landscape has become more complex, with increasing tensions between the US and other major powers like China and Russia. By accepting multiple currencies for its oil, Saudi Arabia can navigate these tensions more effectively and align itself with emerging economic powers. Economic Strategy and Vision 2030. Saudi Arabia's Vision 2030 plan aims to reduce the kingdom's dependence on oil revenue and diversify its economy. Part of this strategy involves establishing Saudi Arabia as a more independent player in the global financial system. Moving away from the petrodollar is a step towards achieving greater economic sovereignty. Implications for the global market. The end of the petrodollar system will have significant implications for global markets, US dollar, and inflation. The demand for US dollars could decrease as oil transactions move to other currencies. This might lead to a depreciation of the dollar, increasing inflationary pressures in the US. As the dollar weakens, the cost of imports could rise, reducing the purchasing power of American consumers and potentially leading to higher interest rates. Shift in global trade dynamics. With oil being traded in multiple currencies, the other countries will need to hold larger reserves of these currencies, reducing their reliance on the US dollar. This could lead to a more diversified global reserve currency system where the euro, yuan, and yen play more significant roles. Geopolitical realignments. The shift away from petrodollars could lead to new geopolitical alliances. Countries that trade heavily with Saudi Arabia might strengthen their economic and political ties with the kingdom, potentially leading to realignment of global power structures. Implications for the US and global economic adjustment in the US. The US will need to adjust its economic policies to deal with a reduced demand for the dollar. This might involve focusing on strengthening domestic industries, reducing debt levels, and managing inflation more effectively. Increased role of emerging economies. Countries like China and European Union could gain more influence in global financial system. Their currencies might see increased usage in international trade, leading to shifts in economic power dynamics. Energy markets and innovation. The shift could also spur innovation in energy markets. As countries adapt to new trading realities, there may be increased investment in alternative energy sources and technologies, reducing the global reliance on oil. Global financial stability. A more diversified currency system could enhance global financial stability by reducing the impact of any single currency's fluctuations. However, it would also require robust international cooperation and coordination to manage the transition smoothly. Conclusion. Saudi Arabia's decision to end the petrodollar agreement marks a significant turning point in global economic history. This move reflects broader trends towards economic diversification, geopolitical realignment, and a more multipolar currency system. While the transition may pose challenges, it also offers opportunities for creating a more balanced and stable international financial system. As the world adapts to this new reality, the need for international cooperation and innovative economic strategies will be more crucial than ever. This was it for today. For more such videos, stay tuned to Uday India.